All right, let's dive in. Welcome to our deep dive into all things crypto trading and investing. We got a ton of stuff to cover today, from expert advice on YouTube to deep dives on market cycles and even tips on picking winning crypto projects.
A lot to unpack, but we'll keep it focused on what's actually actionable, so it's less about just riding the crypto waves and more about actually navigating them strategically.
Okay, love that.
Yeah.
So first up, those 4-year crypto cycles everyone talks about, the ones tied to Bitcoin halvings. Our YouTube expert, Dennis from Virtual Bacon, had some thoughts on that.
Yeah, he actually debunks that whole rigid cycle idea, which is pretty interesting because, a lot of people, they really buy into that narrative.
Yeah, right.
He says instead of just, staring at that halving date, we should be looking at the bigger economic picture, macro liquidity cycles specifically.
Macro? What now? Okay, gotta admit, that one's new to me. What does that even mean for, my crypto investments?
Okay, so imagine the global economy is like a giant swimming pool, right? Macro liquidity is the amount of water in that pool. More water, more liquidity, everyone's happy, splashing around, and asset prices tend to rise. Crypto's no different. It gets swept up in that tide.
So who controls the flow of water into this pool?
Good question. It's mainly the M2 global liquidity and the Fed's balance sheet. They're like the pool pumps,
Yeah.
controlling the flow of money into the global economy. When they're pumping, markets tend to boom.
Gotcha. So instead of watching for the Bitcoin halving, I should be watching these pumps.
Exactly. Tracking those indicators can give you a way better, more reliable idea of where the market's heading. It's like knowing when those pumps are about to switch on or off.
Yep.
The difference between catching a wave or getting caught in the undertow. Dennis even mentions he got caught up in that whole rigid cycle thing back in 2021 and, ended up holding on to positions that tanked.
Ouch. Expensive lesson. So these macro cycles, like a crystal ball for crypto then?
Not quite a crystal ball, no. More like a weather forecast. It can help you see what's coming, generally, But not every little rain shower. You'll still need other tools to navigate day to day. Which brings us to those charts. Technical analysis.
Oh, yeah, those charts. Definitely stared at them a few times, feeling like I was reading a foreign language.
Totally.
Can you actually make sense of those squiggly lines? Or am I better off just closing my eyes and picking randomly?
No, understanding the basics can be really helpful. Even if you're not, aiming to be a chart wizard or anything. It's like learning to read a map before you go hiking, right?
Okay, I can see that. So where do we even start? What are the landmarks on these crypto maps?
All right, so first we have candlestick charts. Might sound kind of intimidating, but they're just, visual representations of price movements over a specific period. Each candlestick, think of it as a story of the market's emotions during a particular time. You got the open, the high, the low, the close, all captured in that one candlestick.
What about those little lines sticking out, the wicks?
Those are important too. They show you the highest and lowest prices the asset hit during that period. Gives you a sense of the range and the battle between the buyers and sellers.
Got it. So I'm looking for shapes in these squiggles, basically. What else is there?
Next, you have support and resistance levels. Basically, these are price points where buying or selling pressure is strong enough to kind of halt or even, reverse a trend. They're like psychological barriers.
So if the price breaks through one of these barriers, that's a big deal.
Huge deal. That's called a breakout. And it often means a big shift in momentum, right? And usually that comes with a surge in trading volume.
So more volume means more action, more people, more conviction behind that move.
Exactly. High volume during a breakout kind of confirms it.
Okay, this is starting to make sense. I'm not a chart wizard yet, but I'm getting there. But there are tons of other indicators, right? You said there were 100?
Yeah, there are. But don't let that freak you out. We'll stick with just 3 popular ones. First, you've got the SMA, the simple moving average. It smooths out price data over a set period, like drawing a line through the average price points over, say, 50 days.
So it helps me see the bigger trend without getting lost in all the daily ups and downs.
Exactly. Then we have the MESID. It gets a bit more complex, but essentially it helps you spot those moments when the short-term momentum is shifting in relation to the longer-term trend.
So if the short-term trend is starting to overtake the long-term trend, it could be a sign that a strong move is coming.
You got it. And lastly, you have the RSI. Think of it like a thermometer for the market. It helps you see when an asset is getting overbought or oversold. Could be a sign a correction's coming.
So if the RSI is showing things are getting too hot, it might be a good time to, cool off and take some profits.
Exactly. No indicator is perfect,
Yeah.
But they can give you additional insights or like clues, helping you piece together the story.
I'm starting to feel like a crypto detective here. But, I do get frustrated sometimes because I hear about all these altcoins and then I can't even find them on the big exchanges.
Ah, yeah, the altcoin treasure hunt. Well, those coin tracking apps like CoinMarketCap and CoinGecko, those are your secret weapons. They can help you.
I'll be honest, I mainly just use them to check prices.
Yeah, most people start there. But these apps can do so much more. Dennis mentioned that AI altcoin, humans.ai.
Right.
It's not on many exchanges.
Yeah.
But with these apps, you can easily find where it's traded.
So no more like scouring the internet for hours just to find out where to buy a coin.
Exactly. Plus, they're great for finding new altcoins in a specific category, right? Let's say you're interested in AI. You can filter by category, see all the top AI altcoins, check out their details, the whole 9 yards.
That's pretty cool, like having a shopping list for my crypto investments.
Precisely. And then, this goes back to something Dennis said about diversifying your exchanges, especially for those low-cap altcoins. The big exchanges are often slow to list those.
So I could miss out on those early gains if I only stick to one or two exchanges.
Yeah, exactly. Because those top exchanges, they often list coins at a higher price. Once there's already demand, we want to be there before that, before the crowds.
Okay, I see the strategy here.
Right.
But what about those decentralized exchanges, the DXs? They seem, a bit Wild West.
They can be, yeah, but that's part of the appeal. You get immediate access to those newly created tokens before the centralized exchanges even notice them. And you can trade meme coins there, the ones that might not make it to those big exchanges.
Meme coins, aren't those just like jokes?
They can be, yeah. But some really gained traction. Like, remember PEPO? It reached $1 billion market cap just from, memes and community hype. No real utility or anything.
Okay, there's a theme here. It's all about getting in early before the hype.
Exactly. Whether it's, using multiple exchanges or venturing into those DEXs. But before you get too trigger happy, we need to talk about how to actually evaluate these projects, because not all that glitters is crypto gold.
Right. It's easy to get swept up in the excitement, but I want to make sure I'm not just like chasing memes and empty promises.
Exactly. That's where our detective work really begins. We've got a 9-step checklist to help us out here, and it starts with the most important thing, the white paper.
So the white paper, that's like the project's blueprint, right? It explains the problem they're trying to solve and how they're going to do it.
Exactly. Think of it as their manifesto. A good white paper will be detailed, technical and easy to understand, at least at a high level.
And a bad white paper, or worse, no white paper at all, that's a giant red flag, right?
Totally. The article we have actually uses 2 examples. Solana, which is a well-established blockchain, they have a super comprehensive white paper. And then you have like Cybertruck, which is, a self-proclaimed meme coin, flashy website, but they openly admit there's no intrinsic value.
At least they're honest. But yeah, most scams try to hide behind like vague promises and fancy words.
Exactly. So the white paper is the first step, but it's just the beginning. We need to dig deeper, look into the team behind the project, understand who's at the helm.
So next up, background checks on the founders and developers.
Precisely. We're looking for experience, expertise, a track record of actually delivering. LinkedIn is a good place to start, the project's website, social media.
And what about the leadership?
Yeah, the leaders. It's not just about, coding skills. It's about their reputation, their transparency. Are they public figures? Do they have a good history? Or are they hiding behind, pseudonyms, which can be risky?
Right. So anonymity is not always a bad sign, but it's something to think about.
Exactly. And this brings us to the heart and soul of any good project, the community.
The community, yeah. I see that word everywhere in crypto, but what does it actually mean?
It's the people who believe in the project, the ones who are, engaged, discussing it, contributing to it. You can get a sense of this by joining their Discord, their Telegram, whatever they use, see what the vibe is.
So it's like checking out the neighborhood before you move in.
Exactly. You want to make sure it's a good fit. If all you see is to the moon and rocket emojis, that might be a sign to be cautious.
Noted. Okay, so we've covered the white paper, the team, leadership, the community. What's next?
Now we get into the tech itself. You don't need to become a blockchain engineer overnight or anything, but understanding the basics is key.
Okay, so I don't need to build a car engine to drive a car, but I should probably know how it works.
Perfect analogy. You want to understand how blockchains work, how tokens work, the specific mechanisms this project is using. Does it make sense? Is it actually innovative, or is it just, the same old stuff repackaged?
So it's about going beyond the hype and actually getting what the project's all about.
Precisely. And this leads us to step 6, understanding the vision. What's this project actually trying to achieve?
Right, because a big vision can be inspiring, but it needs to be more than just hype.
Exactly. You want to see if they have a clear vision, if it's addressing a real problem, does it have a defined user base? Does their solution make sense?
Okay, so the vision needs to be grounded in reality.
Exactly. And that brings us to the roadmap, which is basically their plan for getting from, point A to point B.
The roadmap. Okay, so that's like their project plan, the milestones they're aiming to hit along the way.
Exactly. A good roadmap should be, specific, measurable, achievable, relevant, and time-bound. All those smart goals we hear about.
Right, so no vague promises or crazy timelines.
Exactly. You want to see concrete plans, a clear path to, achieving that vision.
Okay, we've covered a lot. The white paper, team, leadership, community, tech, vision, roadmap. What else is there?
Next, we've got tokenomics. This is all about understanding the economics of the token, how it's created, how it's distributed, how it's used within that whole ecosystem.
Tokenomics. I've heard that word, but I'm not going to lie. It still sounds kind of intimidating.
It can be, yeah. But think of it like this. Every country has its own, monetary policy, right? Tokenomics is like understanding the monetary policy of a crypto project.
Okay, that makes sense. So I need to understand how the token works within the project, basically.
Exactly. And there are a few key things to look for. First, the distribution. How were the tokens initially allocated? Who holds the majority of them?
Right, because if like a small group holds most of the tokens, that could be a red flag, right?
Exactly. You also want to look at the circulating supply, the total supply, the maximum supply. These all play a role in the token scarcity.
It's like understanding the supply and demand of anything, right? Limited supply, high demand, the price goes up.
Exactly. And some projects will have mechanisms built in to control inflation, like burning tokens, for example.
Burning tokens. So that's like literally destroying them, reducing the supply.
Exactly.
Okay, so understanding tokenomics is kind of like doing a financial health check on the project, making sure it all makes sense.
That's a great way to put it. And that brings us to the final step in our due diligence process, reviewing the data.
Okay, so we've done all this like qualitative stuff, but now we got to look at the numbers, right?
Right. We want to see how the project is actually performing out there in the real world. And it's not just about looking at the price chart, although that's part of it. We want to compare it to other cryptos, overall market trends, even external factors like macroeconomic events.
Right, because a coin's price could be going up, but it could still be underperforming compared to the rest of the market.
Exactly. We want to look at the trading volume, market cap, even the sentiment on social media.
So it's like a 360-degree analysis, pulling data from everywhere.
Precisely. And, while we're talking about health, we should also talk about risk management, because even if we do all this research, pick a project we believe in, there's always a chance things could go wrong.
Right. The crypto market's volatile.
Yeah.
Even the best projects can hit a rough patch.
Exactly. That's why it's so important to have a good risk management strategy. And rule number 1, never invest more than you can afford to lose.
Yeah. We hear those stories about overnight millionaires, but it's easy to forget there's a lot of risk involved.
Totally. And another key strategy is diversification. Don't put all your eggs in one basket, right?
Right. So even if one project tanks, you're not, completely wiped out.
Exactly. And having a clear exit strategy is just as important as knowing when to buy.
So knowing when to sell and not getting caught up in the FOMO, right?
Yeah.
Fear of missing out.
Precisely. Sometimes the best move is to cut your losses and move on.
Okay, so it's about setting boundaries.
Exactly. And remember, no risk management strategy is foolproof, so stay informed, stay vigilant, trust your gut.
Okay, so risk management is key, but what about navigating the market itself?
That brings us to another topic that's often misunderstood, technical analysis, or as some people call it, reading the tea leaves.
Oh yeah, those charts again. But you did say, even if I'm not a chart wizard, understanding the basics is helpful, right?
Absolutely. Technical analysis isn't about predicting the future with perfect accuracy. It's more about understanding understanding the sentiment of the market and finding potential opportunities.
So it's more about like recognizing patterns and signals than trying to guess exactly what the price will do.
Exactly. The key is to understand the principles behind those indicators and how they relate to the price action.
Okay, so it's not about blindly following those signals. It's about understanding the story behind them.
Exactly. Now, there are tons of technical indicators out there, but we'll stick with a few popular ones. Moving averages, support and resistance levels, candlestick patterns.
Moving averages, we talked about those. They help you see the trend, right?
Right. They smooth out the price data over a certain period, giving you a clear picture. They can help you spot both short-term and long-term trends, depending on the time frame you're looking at.
Okay, so a short-term moving average might be like the average price over the past 10 days, and a long-term moving average could be over like 200 days.
Exactly. And when those moving averages cross, it can be a signal that the momentum is shifting. Traders often use those crossovers as buy or sell signals.
Interesting. So it's like two ships passing in the night. One's the short-term trend, the other's the long-term trend. And when their paths cross, it can create a wave that traders can ride.
Love that analogy. Now, let's talk about support and resistance levels, those psychological barriers we were talking about earlier.
Right, those price points where buying or selling pressure tends to kind of stop or reverse the trend.
Exactly. Identifying those levels can be super helpful, when you're trying to anticipate those price movements.
So it's like knowing the layout of a maze. You can use the walls to guide you toward your goal.
Precisely. And then we have candlestick patterns. Those are the colorful bars you see on a chart. They might look kind of intimidating at first, but they're actually telling a story.
Like hieroglyphics,
Uh,
but with financial meaning.
exactly. Each one shows the open, the high, the low, the close, all within a specific time frame. And by analyzing the shapes, you can start to see those potential bullish or bearish patterns.
So it's like learning to read the body language of the market.
Exactly. There are dozens of patterns out there, but some of the most common ones are, the hammer, the shooting star, the engulfing pattern, the doji.
A hammer, that's what it looks like. Well, a hammer, right?
Yes. Long, lower shadow, small body.
And the shooting star is like the opposite, right?
Right. Long, upper shadow, small body.
Engulfing pattern, that's where one big candlestick kind of swallows the previous one, right?
Exactly. And the doji looks like a cross or a plus sign. It means the market's indecisive.
Okay, so candlestick patterns are like clues, giving you insight into what the market's thinking. But you did say earlier that technical analysis shouldn't be used in isolation, right?
Absolutely. It's just one piece of the puzzle. You want to consider the fundamentals, the market sentiment, your overall understanding of the space.
Right. It's like a detective gathering all this evidence.
Exactly. And speaking of detectives, let's put our hats back on and talk about a crucial aspect of crypto investing: due diligence.
Due diligence. That's the process of really researching an investment before you put any money down.
Exactly. And in crypto, it's more important than ever, right? It's
Yeah.
like you wouldn't buy a house without having it inspected, right?
Absolutely not. So what do I need to look for when I'm doing my crypto due diligence?
Well, like we've been talking about, you want to research the team, the tech, their vision, their roadmap, their tokenomics, their community, their track record. Transparency is key.
So a good project shouldn't have anything to hide.
Exactly. Be on the lookout for those red flags we talked about, too. The anonymous teams, the crazy promises without any real plan,
Right.
and the excessive hype without any substance.
Easy to get caught up in all that.
It is. But due diligence isn't just about protecting yourself from scams. It's also the ones that can, actually change the world.
So it's about being both skeptical and optimistic.
Exactly. Which brings us to another super important part of the crypto journey: continuous learning.
Continuous learning. Okay, so it's not enough to just like learn the basics and call it a day.
The crypto world is constantly evolving. New projects, new tech, new trends. You got to keep learning to stay ahead.
So it's like a lifelong journey.
It is. And luckily, there are tons of resources out there: articles, videos, online courses, forums, you name it. The crypto community is great about sharing knowledge.
Like having a global network of teachers. That's pretty awesome.
It is. And remember, it's not just about absorbing information. It's about being critical, questioning things, being open to new ideas.
So basically challenge the status quo and be willing to learn and adapt.
Exactly. And one of the most valuable skills you can build is being able to separate the signal from the noise. There's so much hype and misinformation out there.
So I need to like work on my BS detector.
Yes. And that skill, that'll help you not just in crypto, but in life in general.
Okay, so continuous learning is about being adaptable, open-minded, and discerning. But how do I know what's actually valuable? How do I figure out if a project has real potential?
That brings us back to fundamental analysis, looking at the underlying value of an asset. You got to dig deeper than the price chart.
Right, because the price can be influenced by so many things, hype, speculation, even, manipulation.
Exactly. The fundamentals tell the real story. So let's talk about those key factors to consider when we're doing that fundamental analysis.
All right, so first things first, we need to understand the problem the project's trying to solve.
Yeah.
A project without a clear purpose, a mission, it's not likely to gain traction.
Exactly. The problem should be real, it should be impactful, and ideally, it should be something that blockchain can actually help with.
Right, because blockchain isn't a magic solution for every problem.
Exactly. And once we get the problem, we need to look at the solution, the one the project is proposing. Does it make sense? Is it innovative? Is it technically sound?
Right.
Can it scale? Can it handle a lot of users? Those are all important.
Okay, so the solution's got to be practical, but also innovative.
Exactly. And we also need to look at the team, because a bad team can screw up even the best idea. It's like having a great screenplay, but a terrible director,
Right, right.
The potential might be there, but the execution can make or break it.
So we're looking at experience, expertise, passion, a track record.
Exactly. It takes more than just coding skills to build a successful project. It takes leadership, vision, and the ability to navigate this whole wild world.
And then we also need to consider the roadmap, right? Their plan for the future.
Right. The roadmap is key. It should outline those key milestones, the deadlines. It shows us the path from where they are now to where they want to be.
So no vague promises or unrealistic timelines.
Exactly. We want concrete plans and a realistic timeline.
Okay. We've covered the problem, the solution, the team, and the roadmap. Anything else?
We can't forget tokenomics, how the token is used within the whole project. A good tokenomics model is so important.
Because the token is like the fuel that powers the whole thing.
Exactly. You want to make sure it has a clear purpose, that the distribution is fair, transparent, all of that.
So tokenomics is like the circulatory system. Got to make sure the blood's flowing.
I love that. And lastly, you want to consider the project's community.
Community, again, you've mentioned that a few times now. Why is it so important?
Because in crypto, a strong community can be a huge advantage. It's like a grassroots movement, people who believe in the project and want to see it succeed.
So it's more than just trading tokens. It's about being part of something bigger.
Exactly. And the crypto community is great about this. They collaborate, they share knowledge, they're passionate about innovation. So don't be afraid to reach out, ask questions, get involved.
Okay, so find my tribe, my network, my support system.
Exactly. And all of these factors, the problem, the solution, the team, the roadmap, the tokenomics, the community, these are the building blocks of a solid fundamental analysis.
All right, so I'm doing my research. I'm feeling good about my evaluation skills. But what about when even the best projects hit a bump in the road? How do I deal with those moments of doubt?
That's a great question. And it leads us to one of the most important parts of the crypto journey, cultivating the right mindset.
Okay, so picking up where we left off, protecting ourselves from all those crypto threats out there. It's like self-defense, you said.
Right. Like, think of it this way. The crypto world, it's like a big city full of opportunities, but also, potential dangers. You wouldn't just wander around a city at night, without being aware of your surroundings, right?
So what are some dark alleys I should avoid in the crypto world?
Well, like we said, phishing scams, those are a big one. Those tricky emails or messages that are like designed to steal your information. They try to look legit, like they're from your exchange or your wallet provider, but they're not.
So if an email asks for my private keys, that's a bad sign.
Huge red flag. No legit company's going to ask for those. If you see that, it's a scam. Run away.
Okay, noted. Anything else I should watch out for?
Malware, those nasty programs that can, sneak onto your computer and steal your crypto, they can be disguised as like harmless files or programs. So be careful what you download.
Okay, so stick to trusted sources. What about those exchange hacks, though? Those seem kind of impossible to prevent.
They're a threat for sure, but there are things you can do. First, choose a good exchange, one with a good track record for security. Don't just go for the cheapest or easiest option. Do some research.
So it's like picking a bank, right? You want one that's been around, one that's reliable.
Exactly. Look for exchanges with robust security features like two-factor authentication. That extra layer of protection can make a big difference.
Two-factor authenticate, that's the one where you need a code from your phone, right?
Yeah, exactly. It might seem like a hassle, but it's worth it for the peace of mind. Ideally, you also want an exchange that offers cold storage.
Cold storage, what's that?
Cold storage is like a high security vault for your crypto. It's offline, so hackers can't get to it. It's the safest way to store large amounts, although it's not as convenient for like active trading.
Okay, so like a safe deposit box at the bank, but for crypto.
Yeah,
Anything else I can do to like boost my security?
absolutely. Keep your software updated. Those updates often have important security patches. And be mindful of the websites you visit. Stick to the ones you know and trust.
Okay, so proactive and cautious. Got it. Let's shift gears a bit. We've been talking about some pretty advanced stuff, but what about the basics? Like, how do I even choose the right exchange to start with?
Yes. The crypto supermarket. So many choices. But, the best exchange for you, it really depends on your trading style, your risk tolerance, and just your overall preferences.
Okay, so break that down for me. What are the different types of traders?
Well, you've got your day traders. They're constantly buying and selling, chasing those quick profits.
Yeah.
Then you have your swing traders. They hold for a bit longer, riding those medium-term trends. And then you have the long-term holders, the HO dealers. They're in it for the long haul.
Okay, so knowing which one I am will help me narrow down the choices.
Exactly. If you're a day trader, you'll want an exchange with low fees, fast execution, those fancy charting tools. If you're a long-term holder, you'll care more about security, cold storage, and a wide selection of assets.
Makes sense. Got to match the exchange to my my personality, so to speak.
Right. And don't forget risk tolerance. How much are you comfortable losing? How comfortable are you with your assets just sitting on an exchange?
Yeah, those exchange hacks are scary.
They are. That's why choosing a reputable exchange is so crucial. Some even offer insurance, which can help you sleep better at night.
Insurance for crypto. Wow. Okay, so security first, but what about those fees? Those can really eat into your profit.
Oh, absolutely. Fees vary a lot between exchanges. So do your homework. Compare the fee structures and find one that works for you, for your trading volume and style. Watch out for trading fees and withdrawal fees, both of them.
And I'm guessing any discounts are welcome, right?
Always. Some
Right.
exchanges will give you lower fees if you trade a lot or if you, hold a certain amount of their token.
Okay, good to know. So we've got security, fees, matching the exchange to my style. Anything else I should be thinking about?
Yeah, don't forget about customer support. Hopefully you'll never need it, but if something goes wrong, you want to know that they're there to help.
Right, because in the crypto world, things can go wrong pretty quickly.
Exactly. Some have 24/7 support. Some are a little slower. It's good to test them out before you commit, see how responsive they are.
Good point. And some of these websites are so clunky and confusing. What about the overall user experience?
That's huge. A good interface can make your life so much easier. Some exchanges even have mobile apps, so you can trade on the go, play around with different platforms, see which one feels, the most comfortable for you.
So finding the right exchange is like finding the right pair of shoes. It's got to fit well.
Perfect analogy. Okay, let's talk about a strategy that's become pretty popular, especially for those who want to, take a more disciplined approach. Dollar cost averaging or DCA.
DCA, I've heard that term, but not totally sure what it means. Break it down for me.
DCA is all about consistency. Instead of trying to perfectly time the market, which is, let's be honest, impossible, you just invest a set amount of money at regular intervals, no matter the price.
Okay, so it's like an automated savings plan, but for crypto.
Exactly. And the cool thing is, it averages out your purchase price over time. So you avoid buying high and selling low, which is a pretty common mistake.
Makes sense. So it helps you avoid those emotional decisions based on fear or FOMO.
Precisely. And it helps you handle those market dips better because when the price drops, you're actually buying more units for the same amount of money.
Like getting a discount, basically.
Exactly. Now, DCA isn't magic. It's not a guarantee, but it's a solid strategy if you want a more disciplined and less emotional approach.
Okay, so if I'm the type to, get swept up in the hype and maybe make some impulsive decisions, DCA might be a good fit.
It could be, yeah. Helps you stay focused on the long term.
Okay, so we've got due diligence, security, choosing exchanges, DCA. What else is on our crypto survival checklist?
Can't forget about the unavoidable Taxes.
Oh, taxes, everyone's favorite topic, right?
Yeah.
But I guess even in the wild world of crypto, the tax man still comes knocking.
He does. And the laws can be complicated. They're different everywhere. So it's always best to, talk to a tax professional.
Don't want any nasty surprises come tax season.
Exactly. And it's important to remember that even if you're not cashing out into fiat currency, trading between cryptocurrencies, those are still taxable events.
So even if I'm just swapping Bitcoin for Ethereum, I got to keep track of that.
Yes. Keep those records detailed. Dates, amounts, prices, everything. Some exchanges even have tax reporting tools that can help you out.
So good crypto bookkeeping. Noted.
Exactly. And one way to potentially lower your tax bill is to hold for longer than a year. In a lot of places, long-term gains are taxed less than short-term gains.
So being patient actually has tax benefits.
It can. And some countries even have tax havens for crypto. So you could avoid those capital gains taxes completely.
Tax havens. Interesting. But yeah, I'll be doing my research and talking to a tax expert before I make any big moves.
Always a good idea.
Yeah.
Okay, let's move on to something that can help you make more informed decisions. Understanding those market trends.
Market trends, right. That's about figuring out like the overall direction the market's moving, bullish or bearish.
Exactly. And spotting those trends can help you make better choices about when to buy, when to sell, when to hold. It's like knowing which way the current is flowing. Helps you navigate your ship.
So I got to become a bit of a trend forecaster.
In a way, yeah. And there are all sorts of things that can influence those trends. Macroeconomic stuff, regulations, technology, even social media sentiment.
Right. Macroeconomic events, those are things like interest rates, inflation, that kind of stuff.
Yeah.
That all affects the market, yeah.
Exactly. And regulations, if a government announces new rules about crypto, that can have a huge impact. And then there's technology, a new blockchain platform, a breakthrough in scalability that can really spark things.
Crypto's all about innovation, so yeah, got to stay on top of that. You also mentioned social media sentiment. How does that factor in?
Social media is like the pulse of the crypto world, right? You can really get a feel for what people are thinking, what's driving the conversation. If everyone's excited about a project, that can push the price up. But if the sentiment turns negative, if there's a lot of fear and uncertainty, that can lead to a crash.
So basically, social media can be a powerful force, for better or worse.
Exactly. And understanding all these things that can influence market trends that can really help you make smarter decisions.
Okay, so I need to be part detective, part news junkie, part social media guru. Got it. But how do I actually identify those trends? Like, what should I be looking for?
One way is to, follow the news, read analyst reports, talk to people in the community, get those different perspectives.
Right, because everyone has an opinion. Everyone's got a prediction.
Totally. And there are also technical indicators that can help you, like moving averages, trend lines, momentum oscillators.
Moving averages we talked about. What are those trend lines?
Trend lines are basically lines you draw on a chart. You connect series of higher lows or lower highs. It helps you visualize the direction the trend is moving.
Okay. And momentum oscillators, those measure the strength of a trend, right?
Exactly. So you combine all these things together, the technical indicators, your fundamental analysis, the sentiment analysis, your overall understanding of the space, and that gives you a clearer picture of those market trends.
So it's like a puzzle. You got to put all the pieces together.
Exactly. And speaking of puzzles, let's go back to something really important, especially in the crypto world, where there are so many scams and rug pulls. Due diligence.
Right, due diligence.
Yeah.
Really doing your homework before you invest.
Exactly. It's more crucial in crypto than almost anywhere else. It's like buying a house. You wouldn't just hand over your money without, checking it out first, really.
Definitely not. So what should I be looking for when I'm doing that crypto due diligence?
Well, like we talked about, research the team, the tech, the vision, the roadmap, the tokenomics, the community, their track record. Transparency is so important.
So a good project should be open about everything. They shouldn't have anything to hide.
Right. And watch out for those red flags, the anonymous teams, the big promises without any concrete plans, all the hype with no substance.
Right. It's easy to get caught up in all that excitement.
It is. But remember, due diligence isn't just about avoiding scams. It's also about finding those projects that can actually make a difference, the ones with real potential.
So be skeptical, but also optimistic.
Exactly. Which leads us to another crucial piece of this puzzle, continuous learning.
Continuous learning. So I can't just learn the basics and then coast.
The crypto world changes all the time. New projects, new tech, new trends, always evolving. You got to keep learning or you'll get left behind.
So it really is a lifelong journey.
It is. But the good news is there are so many resources available. Articles, videos, courses, forums. The community is really great about sharing what they know.
So like I've got a global network of mentors at my fingertips.
Pretty much. And remember, it's not just about absorbing information. It's about being critical, questioning things, being open to new ideas.
So challenge the status quo. Don't just accept things blindly. Be willing to, learn and adapt.
Exactly. And one of the best skills you can develop is that ability to separate the good information from the bad. There's a lot of noise out there.
You got to sharpen that BS detector.
Yes. And that's a skill that'll help you everywhere, not just in crypto.
Okay, so continuous learning is about being adaptable, open-minded, and discerning. But how do I know what information is actually good? How do I really assess the potential of a project?
That brings us back to fundamental analysis. Evaluating the underlying value of an asset. Got to look deeper than just the price.
Right, because price can be misleading. It can be manipulated. The fundamentals, those tell the true story.
Exactly. So what are some of those key factors to consider when we're doing that fundamental analysis?
Well, we can understand the problem the project is trying to solve. If there's no clear purpose, no real mission, it's not likely to succeed.
Exactly. The problem should be a real problem, something that matters. And ideally, it should be something that that blockchain can actually help with.
Right.
Blockchain isn't a solution for everything, but it's a powerful tool for the right problems.
And once we understand the problem, we got to look at the solution they're offering.
Right. Does it make sense? Is it innovative? Is it technically sound? Is it scalable? Can it handle growth?
So it needs to be practical, but also cutting edge.
Precisely. And then we got to look at the team, because even the best idea with a bad team, that's a recipe for disaster.
It's like like having a great recipe but a terrible chef.
Perfect analogy. The ingredients might be good, but if the chef doesn't know what they're doing,
It's not going to turn out well.
Exactly. So when we're looking at the team, we want experience, we want expertise, we want passion, we want to see a track record of success.
Because building a successful crypto project takes a lot more than just, coding skills.
It does. It takes leadership, vision, and the ability to survive in this crazy world.
And then there's the roadmap. Right. Their plan for the future.
Right. A clear roadmap is so important. It shows us the path forward, those milestones, the deadlines, it should all be laid out clearly.
So no empty promises, no unrealistic timeline.
Exactly. We want to see a real plan.
Okay. The problem, the solution, the team, the roadmap. What else?
We can't forget tokenomics, how that token is used within the whole ecosystem. A good tokenomics model is crucial for long-term success.
Right. It's like the fuel that powers the whole project.
Exactly. You want to make sure it has a clear purpose, that the distribution is fair and transparent.
Tokenomics is like the circulatory system. Got to make sure the blood's flowing.
Love that analogy. And lastly, we want to look at the project's community.
Community, you keep coming back to that. Why is it so important?
Because in the crypto world, a strong community can be a game changer. It's like a grassroots movement, a group of people who believe in the project and want to help it grow.
So it's about more than just, making money. It's about being part of something.
Exactly. And the crypto community is amazing for this. They collaborate, they share knowledge, they're passionate. Don't be afraid to reach out, ask questions, get involved.
Find my tribe, basically.
Yes. And all these factors, the problem, the solution, the team, the roadmap, the tokenomics, the community, those are all essential for a good, solid, fundamental analysis.
Okay, so do my research, feeling good about my my evaluation skills. But what about when even those great projects hit a snag?
Yeah.
How do I handle that doubt and uncertainty?
That's a great question. And it brings us to one of the most important parts of the whole crypto journey, cultivating the right mindset.
Mindset, huh? Okay, so we talked about all the practical stuff, but now we're getting into the mental game.
It's super important, especially in crypto where things are moving so fast and, emotions can get in the way.
So what's the right mindset for this?
It's not so much about, having a specific set of beliefs. It's more about a certain way of approaching things. And the most important thing is patience.
Patience, yeah, that makes sense. I know crypto's not like a get-rich-quick thing, but it's easy to get caught up in the hype,
Totally. You got to remember, building wealth takes time. It's like planting a tree. You're not going to see fruit the next day.
Yeah.
You got to nurture it, give it time to grow.
Okay, I like that analogy. So patience is about like the long game, not getting discouraged by the ups and downs.
Exactly. And it's about, weathering those storms. When the price drops and everyone's freaking out, that's when your patience is really tested.
Yeah, that's when you're tempted to make those emotional decisions.
Right. But if you did your research, if you believe in the project, those dips can actually be opportunities, a chance to buy more at a lower price.
Okay, so patience is about staying calm and sticking to the plan. What else is important for this crypto mindset?
Resilience, the ability to bounce back. Because, in crypto, you're going to face challenges. You're going to make mistakes. You might even lose some money along the way.
Those setbacks, yeah.
It's about not letting those things defeat you. Learn from them, adapt, and keep moving forward.
Because what worked yesterday might not work today.
Exactly. You got to be adaptable. And another key quality is curiosity.
Curiosity. Okay, so it's not enough to just learn the basics and then, stop.
The crypto world is full of new stuff all the time. New projects, new tech, new trends. You got to be curious or you're going to miss out.
So stay open-minded, keep learning, keep experimenting.
Exactly. Read, research, ask questions. Don't be afraid to try new things.
This space is all about pushing the boundaries.
It is. And that leads us to another really important part of the mindset, community.
Community again. You've mentioned that a lot.
Mm-hmm.
But why is it so important for, my mindset?
Because the crypto world is more than just tech. It's a community of people who believe in this, They believe in decentralization and the power of this technology. And connecting with those people, it can be really powerful.
So it's about, finding your tribe, your support system.
Exactly. The crypto community is so good at this. They're collaborative. They share knowledge. They're passionate. Don't be afraid to reach out. Ask questions.
Okay, so find my people, connect with them, learn from them.
Exactly. And all these things together, the patience, the resilience, the curiosity, the community, they all contribute to this mindset that can really help you. It can help you navigate all the ups and downs.
This has been really eye-opening. I feel like I've learned so much more than just, the technical stuff.
That's what we were hoping for. We wanted to give you the tools and the mindset to really thrive in this world. Remember, do your research, stay informed, stay connected, and keep learning.
Awesome. Thanks for this. And for our listeners, remember, this is just the beginning of your crypto journey. Keep exploring, keep learning, and most importantly, have fun.
That's it for this deep dive.